we just reported our first quarter results. While the revenue performance was not quite up to our mark, that what myself and Praveen expected, we actually did extremely well in many areas of our business, especially in the core areas that we have been focusing on, both in the renewal of our existing core business as well as in the especially in the new areas. And so that was very encouraging. But of course, we had a slowdown in revenue growth compared to what we had expected, and that was that led to our 2.2% increase in our revenue over the course of the quarter. That happened primarily, as I have said earlier today, on the basis of certain unexpected, unanticipated slowdown in discretionary spending in some parts of the business, in particular in consulting services and in package implementations. And then also some of the projects were slow to ramp up in some of the large deals that we won in the last few quarters. So that's where we are. We are actually quite excited that in the renewal of our existing services with design thinking, with our work in automation, and with our work in innovation initiatives like Zero Distance, our core strategy is kicking in, and I'm very heartened by that. It is happening now at a great scale, as well as in the embrace and the adoption of our new services as becoming a revenue driver. We saw significant growth. So that is something that we are quite positive about. So overall, it was I'm happy with the overall performance during the quarter, and disappointed at the revenue growth, but the rest of the aspects of the business have done well. So with that, while we are waiting for Ranga, Praveen and I we can start, and also our three presidents are here, and Fish is here, Manish is here, a lot of our leadership team is here, and would love to answer your questions.
Hi, Vishal. Hi, Chandra here. Vishal, just want to understand, you're completing 2 years at the helm next month, and I mean, till last quarter, people thought, the turnaround was sort of complete, Infosys is out of the woods, all those statements. Based on this quarter, would it be fair to assume there are still some persistent issues in terms of ramp up, or, with certain clients? How would you really assess this? And also a question for the HR head, because of the spike in attrition, is this a seasonal issue because, people go for higher studies usually this quarter, or are there other reasons, and will we see this come down next quarter? Thanks.
No, I think that the embrace of our strategy across the company and in our client base is actually going extremely well. If you just look at the details of that, which is, for example, the growth in our large deals, the growth in which means that clients are more and more confident about giving us this business. And in our existing clients, if you look at our top 5, top 10 and top 25 clients, we have seen huge growth. So top 25 clients actually grew by 4.4%. Top 10 clients grew by close to 4%. And these are, significant drivers of our revenue. The number of 100 million plus clients went from 14 to 17. So that is a huge jump as well. So all these things are working extremely well. And then as I mentioned already, the new areas that Sandeep has been driving, this is something that has seen amazing growth. Our 55 million revenue that we added in the course of the quarter, 12 million of that growth actually came from things that are completely new, which is more than 30% of the 30%? Yeah, roughly 30% of the growth came from there. So these are all extremely encouraging signs. So I wouldn't read anything from this from a long-term perspective. The strategy is kicking and so forth. So, of course, if the renew part of our main core business is working well, and if the new part is working well, then where is the problem? The problem happened in some of the pockets of our businesses, like in consulting, we had a significant decline, as I mentioned earlier, because of this couple of things. And then in India, our India business, we lost roughly $4 million of revenue. De-grew by $4 million, and Finacle had a very good Q4, and so Finacle had $2.5 million of decline. So these things all added up, and we'll focus more on them. BPO was flat. compared to other businesses. So we have, going forward in the course of the rest of this year and in the time ahead, of course, we'll focus more on these businesses as well, in addition to continuing to fire on all cylinders on the main strategy. So I would not read more than that into it.
Hi, Adit from CNBC TV 18.
Yeah, I think you're right. You know, what happens is this Q1 is always a quarter where attrition is high, and we've seen it over the last 4 or 5 years that there is a pickup of attrition of over 3 to 5 percentage points in this time. And this year is no different. Yeah, so I think, and most of the attrition is at the entry level people. You know, entry level. And I don't think that's a cause for concern. So looking at the trends, it seems quite natural. Thanks.
Hey, Adit here from CNBC TV 18. Just wanted to understand, in terms of the geography spread, US is, I think, up 2.5% sequentially. Europe is, marginally down on a constant currency basis. So how does this tie into the comment that was made on, some large projects not ramping up? And are these early signs of issues around Brexit? And, are these telltale signs really?
The slowdowns were across geography. I mean, our main business is in US and Europe, so that's where the slowdowns were. The not slowdowns, but the slow ramp up of the projects that I talked about, and then from a consulting perspective, the discretionary reduction and non-renewal in some areas. This was also in Europe, but this had nothing to do with Brexit or any of these kinds of what is the word? Macroeconomic, secular. The other fancy word is secular. So these had nothing to do with secular macroeconomic forces. This is simply client situation and our execution. In terms of Brexit, it is my personal view on it is that whenever walls get created between businesses and between institutions, this is not a good thing. Generally from a societal perspective, but from a business point of view, actually, this is an opportunity for us. This is, the more that systems become isolated and separate, the more there is need for integration, there is need for interoperability, there is need for transparency, analytics, governance, regulatory work, etc. So long term, over time, assuming that Brexit happens, this is going to be a good thing for us. In the near term, there is a lot of anxiety around it. People are trying to figure out what it means and so forth. And so there is some uncertainty. But so far, there is no impact in business because of Brexit, and it hasn't. Maybe Mohit, you can answer that part of the question.
Sure. So as of now, look, I think the key thing is Brexit came as a shock for most of our clients as well. So they're in the process of preparing, their plans depending on the approach the UK government takes for it. As of now, with maybe one exception, we have not really seen a negative impact to our business because of Brexit. And in the long term, as Vishal mentioned, it's anybody's guess, right? I mean, we could see potential upsides because of the restructuring of businesses, because of the regulatory mandates. Equally, we could see negative surprises because of volatility and delays in decision making. But as of now, this externality has not really impacted our business.
Yeah, just to add, I think in the near term, of course, we did see the currency volatility. In Q1, of course, we effectively hedged, and the impact on the profitability, in fact, we had some gains on hedges as well. But I think we do expect certain near-term volatility to continue, not just in rupee, but also in the cross currency. And we are monitoring and taking appropriate hedging positions.
Vishal, hi, this is Sajid here from Bloomberg Point. When you ended FY16, you had a TCV of nearly $2.9 billion. And that gave the street the assumption that the guidance of 13.5, of that 4 to 5% would be taken care of that TCV. Now, that TCV is not reflecting into the revenue, and that's why you had a disappointing quarter. which part, what percentage of the TCV is is inactive, or you are not able to ramp up as of now, and what was the kind of addition to the TCV in the first quarter?
Well, I think you're right. Our TCV wins last year was good, and the same momentum has continued this quarter as well. See, the key thing is there is a natural progress of how that TCV translates into revenue, and it is primarily affected by three big pieces. One, of course, the nature of service itself. For example, certain services like infrastructure management, etc. The ramp up is gradual. First, there will be there'll be transition, followed by shadow support, then takeover. It is a very gradual curve, which kind of somewhat back-ended, right? Whereas in case of an application development or a maintenance, it's a more steady. Right from the first quarter, you'll have a very quick ramp up. So that is one. And the second one, of course, is sometimes clients also expect certain things to ramp up from existing vendor to the new vendor in the one quarter. And for various reasons say, hey, this can't happen. In this quarter, we'll be shifted to this quarter. It's not that the projects are cancelled. It is not that they are rethinking. It's nothing to do with that. It is sometimes these things, pushing by quarter and the ramp ups happens. So it's a nature of service as well as a very particular, deal specific, the ramp up curve. Typically what we have seen is that for every $100 million of TCV, for the current portfolio mix that we have in terms of services, about 7.5 to 10% typically accrues during the first year. So that has been the trend line, and we have not seen significant change on that. And what Vishal and Praveen referred to earlier was primarily an account of certain ramp-ups. The extent to which we expected did not happen in one or two cases. That's what they were referring to.
Were they significant enough to bring down the guidance?
Bring down, that was not the only reason, right? I mean, they also said that it also had some of the discretionary consulting and package implementation pieces slowed down.
Hi Vishal. So I have 3 to 4 doubts here. So basically the first thing you mentioned about the revenue the low revenue growth. But what I'm also seeing here is the decline in the gross profit, which has gone into the negative territory for this, and which is essentially, as far as the income statement is coming, is showing the increase in the cost of sales is driven by that. Why has the cost of sales increased? Second, moving on to Brexit. So you have a segmentation wherein you divide US, Asia, India and Europe. So after this Brexit, would you be separating England from the European segment? And the third thing regarding immigration, essentially Brexit has been driven by the immigration issues. So what are your take on that, and what is your take on that? And also in US, we are seeing that the anti-immigration movement is picking up with Donald Trump every now and then saying something or other against the immigration.
Let me first answer the profit question that you had. I think what you're comparing is really the quarter-to-quarter gross profit. I mean, that's not the right way to really compare for the first quarter. We have to really compare what has been the profit as compared to the Q1 of last year. As you really know, clearly know, the Q1 typically has compensation increases and the visa costs, which will not be there in Q4. That is unique to Q1, right? But if you look at year on year, gross profit has increased by 10.5%. And net profit has increased by 7.4%, and operating profit has increased by 11.3%. So there is a seasonality on these compensation increase and visa costs, which is unique to Q1. It happens in every Q1. If you looked at last Q1, also the same thing. So it is incorrect to state that on year, our profitability has declined. In fact, the operating margin of this quarter is 24.1, which is 0.1% higher than operating profit of last year's same quarter. On the other,
I think he assumed that we are responsible for separating England from Europe. I want to assure you that we have a huge responsibility on our shoulders, but this one is not ours.
No, I didn't assume. Basically, what I meant from my question was that I was talking about the segmentation. So you usually, how do you segment as US, Europe and India? Now that Britain is separating from the Europe, would you be creating another segment from that? So an immigration issue I was talking about, given the fact that every now and then Mr. Trump talks about the immigration thing, that he is against immigration, and there is a probability that he would be coming to power in US, and also to a certain extent, Ms. May is also quite not too in favor of immigrants. So how do you plan to deal with that issue? And also H1B, they're pushing some things for H1B visa also.
So on the UK specific issues, look, the way we run our business is across global industry verticals, right? And that will not change. So, we will continue with that. And the reporting will continue, as we can see it now, will continue to include Europe, including the UK, because the UK will geographically still remain a part of Europe. And then on the US immigration questions, I will pass it on to Sandeep, who is also an expert on Donald Trump.
Thank you, Mohit. So look, all right. Look, we've seen election cycle after election cycle. This is an election year, and every election year there is the rhetoric over immigration, over H1B visas goes up dramatically. This year has been particularly dramatic because of the nature of the candidates and the nature of the polarization. But every year after this happens, things settle down and people come to their senses. What we have to look yeah.
Sandeep, would you say that this election cycle trumps the others?
Yeah, exactly. What we are doing is consistent with our strategy, which is threefold here. Number one is leveraging technology, leveraging disruptions in technology. We are trying to figure out new business models by which we have less dependency on on-site staffing in some kinds of projects. The second thing we are doing is in every market we operate in, not just America, but in every other market, we have to focus on local hiring. So we have local people, local experts who are closer to the client, who belong to that country. And thirdly, we leverage industry bodies like NASSCOM, CII, etc., to continue to articulate the value of our propositions to those different economies, whether it's America or different countries. These three things we do on a continuous basis. So that de-risks our dependency or on these kind of events if they may happen. So we are watching for developments very closely, but we don't expect anything dramatic.
Hi Vishal, this is Tanvi from Reuters. I was just wondering if you could throw some light on what other factors led to the cut in revenue forecast. Are you expecting a slowdown in other markets or any other such reasons?
No. As Ranga said earlier, we had a few factors contributing to lower than expected revenue growth in this quarter. One was the unexpected slowdown in the discretionary spending in consulting and in package services, and the other was the slower than expected ramp up in projects from deals that we had won, and a couple other small things like the decline in the India business and small decline in Finacle. So altogether, these contributed to revenue growth of 2.2. And when you look at the forecast, the guidance that we gave, the 11.5 to 13.5 for the year, the nature of our business is that it is centered on quarters, and the first quarter impact ends up having a bigger impact on the rest of the year. So that is basically what has brought down the guidance by 1 point.
So would the rise in cloud-based services have any impact? Has it had any impact yet?
Yeah, it will have a positive impact. It will. Sandeep was just telling me that our partnership with Microsoft and with Amazon and others in the cloud area is doing extremely well. And Ravi started back in February a legacy modernization practice, moving legacy infrastructure to the cloud. That has been growing extremely well, and perhaps Ravi can talk a little about that. So yeah, cloud is the infrastructure delivery and consumption mechanism of our times, and we are extremely excited about our offerings in this area.
Yeah, so cloud-based services certainly has a positive impact. The per capita spend just goes up. the ticket sizes go down, but the number of transactions go up. What we've also done is a modernization initiative to move mainframes onto the cloud, and that has picked up significant momentum with both Microsoft and Amazon. So that's actually getting a lot of traction now, and we are actually hoping that we could actually monetize this a lot more for in the next 3 quarters of the year.
Hi Vishal, Varun here from Mint. At the back, sir. Behind you. So a couple of questions. So a couple of questions to the management. So 3 things explains this lower revenue guidance. Slowness in consulting, significant slowdown in the projects which were supposed to pick up and it didn't happen. Fair enough, slow down. And finally, some problems in ERP. Can the management just help explain quantitatively, say how much each of this shaved off your growth from your revenue? Because a 2.2, however you slice it, it's a poor start to a fiscal.
So, Varun, I think, as Vishal earlier said, Q1 has a compounding effect and a very important quarter for the financial year. To recollect, last year, we grew 4.6% in Q1. That gave us a good subsequent, growth rate. As a thumb rule, every 1% reduction in the growth of Q1 impacts the entire financial year's growth by 1%. I mean, that is broadly what we have seen in all our traditional pieces. So if you look at when we gave the revenue guidance of 11.5 to 13.5, compared to that, we expect around that kind of a reduction in the Q1. So correspondingly, as a measure of what always we believe in, as a measure of our practice, we have guided lower. And that 1%, if you look at approximately 25 million, right? Now, it is not that, hey, will 25 million make an impact on the entire year is not the question. I think the key question is 1% reduction in Q1 typically impacts the entire year by 1%. And of course, there are the new services which are there, which we need to see how they ramp up. The momentum is quite encouraging in Q1. But at this point in time, we have to kind of state our guidance based on the visibility that we have, and that has been always our practice. We are not saying that, look, the world has come down or something like that. We are just saying that, look, here is the mechanics that we have, and here is what our visibility is, based on which we are stating the guidance.
Thank you, Ranga. But my question was this 25 million, can you help me understand that of the 3 slow areas, how much did each contribute, sir? So consulting had growth by how much?
See, I think we have stated the broad reasons. We cannot clearly talk about individual contracts, individual customer names, etc. We have broadly indicated which are the revenue streams and broad reasons. So as I was responding to the earlier question on which of the project ramp-ups which we had expected earlier in a couple of large deal wins, there are not many, couple of projects, but we can't be that specific in naming the accounts.
So the follow-up to this is, the slowness in ERP, what is really like? I mean, slowness in ERP, can you just give us some color? Is it just limited to some particular clients or industries? What is really happening in this ERP space, sir?
No, the complex package implementations are not as frequent, and so I believe also this is a temporary thing. This is something that is not, I don't see that as a what was the word? As a secular. Isn't secular about religion? As a secular thing. So this is, I think, something that will come back. And what was your other question, Varun?
ERP space, is it limited to particular industries? Say retail, financial sector, healthcare. What really is what I was looking for?
We have a practice where we do package system implementations, and this practice grew less than the other practices. That is what we mean by this.
I mean, were you more vulnerable to particular industries?
No.
By when do we expect it to come back, say in the second quarter, sir? Second quarter, all these project ram downs which have happened, Can we expect it to come back in the second or the third quarter?
No, these are very different things. So there
this is another thing.
Let me explain. There are no ramp downs. There is a slower than expected ramp up in projects from the deals that we won. That is one thing. Reduction in unexpected reductions in discretionary spending around these package systems and consulting is another thing. And slowdown in Finacle to the tune of $2.5 million, and slowdown in India to the tune of $4.5 million were other things. So this is basically the situation. It is not any bigger deal than this.
So that is what I'm trying to understand. Why the slowness from the large deal wins? Is there something specific to clients?
Yes. It is we believe that it is in particular these 2 or 3 clients where we saw this happening. This is not anything broader than that.
And these 2-3 clients are across which industries, sir? Can you? I'm not asking for names, but which industries?
Generally, life sciences. Generally, all these combination of events impacted life sciences this quarter more than others.
Meaning business coming ramp.
It is the ramp up, and it is also not ramp down that we shall correct it.
And can we expect these ramp-ups to happen in the second quarter, Ranga?
I think, at this point in time, the visibility, what we have here said, and we have to see how the Q2 progresses. Let's see at the end of Q2. At this point in time, we don't want to make a very emphatic statement on that.
But just 2 more questions here. Firstly, a lot has been, like when you started with, you brought consulting last year to the parent Infosys Consulting as a subsidiary. A lot was spoken that it's the tip of the spear. You launched a new service line, Aikido, great measures. Sadly, it hasn't really translated into revenue, and now that has you have to live with this pain for the next 9 months, so to say. What is really happening, sir? Have you failed somewhere in your execution strategy?
If you look at Aikido and the design-oriented services, those are actually growing quite well. The consulting is our traditional consulting business where close to 3,000 employees have worked. This is resulting from the earlier acquisition that we had made of Lodestone and of the homegrown management consulting practice, as well as the package implementations. So these are all together in this consulting area. The tip of the spear initiative actually is our strategy, and that has been working extremely well. That has in fact resulted in the huge number of strategic engagements that we have now with our clients. It has resulted in the large deal wins consistently over the last many quarters. This is all led by the same tip of the spear Aikido services mindset. The $809 million in large deal TCV wins this quarter, 757 in the quarter before, and so on and so forth. And also, if you look at, especially at our top client performance, the top 25 clients grew by 4.4% in constant currency in the quarter, which is these top 25 clients in our business make a huge amount of revenue, percentage of the revenue for us. Similarly, the top 10 clients also grew. This is all a result of this strategy. The issue that I'm talking about, that was the unanticipated issue, was with regard to execution in a few projects from this, where because of discretionary spending cuts and so forth, the renewals did not happen and the projects ended without resulting in an ongoing follow through and so forth. So this is not there is no significance to anything more broadly about consulting in any of this. Consulting continues to be a very strategic part of our business, and indeed the tip of the spear is the strategy that we have been executing on over the last year.
One last question, sir. At the end of fourth quarter, 13.8, the upwards guidance which you had given on the dollar terms. In hindsight, do you believe you and the board were a little aggressive in giving such kind of a guidance? And I'm asking this question now because, again, you've brought it down by 150 bips, the dollar, where you expect at best 12.3. Are you now again under-delivering? Why can't we have like an absolute whatever you are seeing in the market from your perch, rather than so much of volatility? Today, the stock is down 9%. So much investor wealth has lost, sir.
Varun, as I have said and as Ranga also said, we have had a practice of sharing our guidance, the information, our philosophy, and not only in my time here, but also going back long before that, has been to minimize the asymmetry between what we as the management see in our business and what our investors and the financial markets see. And we do that by providing as accurate a guidance as we see ourselves. At the beginning of the year, we saw 11.5 to 13.5 on constant currency terms, or 11.8 to 13.8 on March 31 terms, and that is what we gave as the guidance. Now we are 3 months into it. Couple of things that we did not expect happened, and a couple of the slowdowns and so forth that I talked about. So as a result of that, the visibility that we have now is in the 10.5 to 12 range, and that is what we are setting. There is nothing more to that or less to that. Ranga, you want to add anything?
Yeah. Just to add, to just wind you back into this room 3 months ago. If you look at it, we exited FY16 on a positive 1.6% growth after several years of negative growth. So we had a good tailwind. Plus, during the previous year, we had 45% uptick in the TCV, and many of those TCV wins, we expected some of the ramp-ups happening in Q1. So these were one of the key key factors on improving, giving that particular guidance of 11.5 to 13.5. So what has happened? We have reduced it by 1% at the lower end, right, from 11.5 to 10.5. So for precisely the same reason which I indicated earlier, typically 1% reduction in Q1 growth rate impacts the entire year by 1%. So as a keeping in view our earlier belief that we will go by what the visibility we have at this point in time, and based on the Q1 performance, we'll give that visibility. Based on Q4 performance last year, we had that visibility, we gave that guidance. So it's very...
Sir, Praveen here from New Indian Express. Sir, this is on HR, sir. So the attrition rate at the gross level is 21, which is almost 1/5 of your at the attrition level. Now, can you tell me, sir, what verticals were the ones which felt the brunt of it?
So the 21 that you're talking about is for the Infosys group level, which includes BPO and other things. If you look at just Infosys, that's about 15.7 or 15.8. Yeah. So frankly, I don't think there's any verticals that is there. I just mentioned that most of our attrition is that this is natural. At this time of the year, people go for studies, those kind of things. And all of that is people with 3 to 4, 5 years of experience. That's a kind of, between less than that. That's the kind of areas where we lose people. Equally, the other interesting thing is when we look at it, our high performer attrition has come down. Over the last quarter, it has come down by almost 2 percentage points, from about 13.2 to about 11.2 something. So that's a significant improvement in what we see. So I think this attrition is, if you ask me, it's more natural, more for people moving and doing other things like, further studies, etc. And more importantly, the high performer attrition is something which is much more in our favor, and that's what we are aiming to kind of improve.
So I have one more. Sir, I'm sorry. Sir, it is just that so at the vertical level, you will not be able to share anything as to which.
There is nothing. I mean, all the verticals. I don't think there's anything very significant at all in any of these verticals.
Hey, Radha is sitting behind him. Radha, when did you join the media, man? Balaji, sir, we have been missing you.
Yeah, you always miss. You are lucky to miss. So I don't know what has been covered, but from a technical point of view, I'd like to know from Ranganath how much actually this hedging is helping or not helping you, the way you have revised it, particularly in dollar terms, dollar value.
Yeah.
What actually was very simple words, simple figures. how much you hedged for this year?
Yes.
And whether there has been again more hedging happened, and what has been the non-operative?
Sure. So I think
sequentially.
Sure. I see there are two questions there. Let me talk about first hedging. We have hedged, always our policy is that we hedge net FX assets on a rolling basis for about 2 quarters. We have consistently followed that hedging policy for several quarters, and it has helped us. Even this quarter also it helped us in reducing the volatility on the P&L. So about $980 million of hedging that is there on the books today across currencies. And if you look at, I think, if you're referring to the guidance 1% dip is in constant currency. So it is not really on the hedging or the currency movement. It is in constant currency. So that is primarily because of the business reasons that Vishal and Praveen outlined earlier. So as far as the hedging, we hedge the net foreign current assets, which on a rolling basis for about 6 months, that works out to about $970 to $90 million.
So how much you attribute actually for business situation and then to volatility? We are revising because the first.
So if you look at the
revising it lower.
Yeah.
What would be the ratio or percentage?
If you look at the hedging, primarily comes on the other operating non-operating income, and that has been stable. If you look at non-operating income, is at about $110 million compared to $112 million earlier. This has been pretty much stable. So we hedge our net FX assets on a rolling basis, as I said. So hedging has been has actually shielded the volatility on the other operating income. I think if your question is on the revenue side, on the constant currency basis itself, we have reduced the guidance. It is not really relating to a particular currency. It's in the constant currency basis.
And maybe I can add that Ranga's team, under Ranga's leadership, runs an extraordinary treasury operation. And the safety and the liquidity of the financials is the primary priority, and it is quite extraordinary what they do.
CNBC TV 18. Just wanted to understand what's the kind of pipeline that the company has at this point of time, both in terms of TCV and the number of large deals that the company is chasing, and which verticals are showing more promise than others. Secondly, Vishal, you did mention that there is some sort of slowness in the India business and some sort of tapering off of revenue happened on the Finacle side. If you could just throw some more light on that front. Thank you.
So look, I mean, we can talk more from a Q1 perspective. In Q1, we spoke about the fact that we had over $800 million in TCV wins. These were 10 deals. These were spread across the world. So we had wins in Australia, the US, Europe, and these were across industry segments, right? I think our pipeline remains healthy for large deals. And we don't quantify it beyond that, right? We've given you the breakup for Q1, and we remain optimistic about conversion rates and the TCV to be declared for Q2.
Also on India revenues and Finacle revenues.
On India revenues, India, we typically, big percentage of our projects in India are government projects. These are all fixed price system integration projects. So the revenue recognition and everything based on the milestones we complete. So on a smaller base, India is also very small base. So on a smaller base, on a quarterly basis, you'll always find these fluctuations. So I don't think we should read much into the India unit performance.
And on Finacle, even though we have pointed that out as a decline, actually the previous quarter Finacle had a great performance, in particular owing to a couple of large deals, and we dropped by $2.5 million in this quarter, which again on a relatively small base of 73 million, it looks large, but actually the product has been doing extremely well. You heard that some of the leading banks like Paytm and others have embraced Finacle, and we have some massive deployments going on of Finacle, so we are continuing to be extremely excited about the prospects of Finacle. So I don't want to comment on the strategy of other companies. In our case, I mean, like Praveen said, a big percentage of the India business comes from government-related projects and so forth, and then also the private sector projects are slowly increasing. But overall, the India business is a quite a small portion of our total revenue, and that is, in our case, this is how it is.
See, we have very selective in the kind of projects we take. We don't go after every project in the government thing, because it's executing government projects, we have time and again said is very tough. And but at the same time, and it's an interesting project which makes a big impact to the country, we want to take those. So we don't go after every project. So whenever there is something interesting, we do that. The last project we won was the GSTN, which we thought is a good one. But as and when there are opportunities where it is very significant and impactful, we'll be happy to do.
Hi,
Ranga?
Vishal Vibhu here. This one question about one is your short-term growth guidance, and that has been reflected in your in your guidance that you have lowered for the full year. And this is, I wanted to check about the Vision 2020. Given the uncertainty in the business environment, and how you mentioned how you witnessed unanticipated slowdown in certain areas, also how slower ramp-ups also happened in certain projects. And now that the full impact of Brexit actually is yet to unfold, because it will take at least 2 years, and you derive 23% of revenue from Europe. So given all this uncertainties, how comfortable you are at the moment towards achieving the Vision 2020?
So Vibhu, the 2020, a 5-6 year long target should not be affected by its definition. If it is a long-term strategic ambition of the company, it should not be impacted by a quarter or even a particular year. We are on a large-scale transformation of the way our company works, the way, frankly, also our industry works, where we augment people with technology so that, in the words of Professor Mashelkar, we can enable people to do more with less for more. And in the process, we transform ourselves from a more cost-oriented industry towards an innovation and value-oriented industry, where a smaller number of people can do the same projects, where AI and automation simplify the work that is done by people, that frees up productivity in order to unleash our creativity and our imagination. All of this, as we have showed in the last 2 years, is happening. It is starting to pick up steam. It is starting to make an impact on the business. And I expect that this will continue to grow, and therefore I continue to be extremely excited about this ambition of ours, this aspiration of getting to 20 billion in 2020, at 30% margin and $80,000 of revenue per employee. This does not change as a result of one quarter.
Thank you, Vishal. Just one more follow-up question. Someone asked you about the India revenue. Actually, consistently for last few quarters, we are seeing how India business for Infosys is not growing. And in fact, you are one of the CEOs who are very bullish about the growth prospects in India. Especially after the new government took charge, how they are driving technology-led initiatives. Are you seeing that those are really not materializing in driving revenue for companies? And second thing, being someone who on and off discuss with global CEOs, meet with them, how is the mood of the global CEOs about India?
I think generally the mood of the global CEOs is hopeful. It is excited. They have a lot of hope assigned to the transformation that our government has been putting into place. A lot of the initiatives like Make in India and smart cities and so forth are still early, and in terms of deriving tangible commercial projects and software projects and services projects out of that, this is still in the early stages. We do remain excited about, for example, smart cities, where we are doing a lot of work with other partner companies and actually using the MANA platform in many of this Internet of Things and smart cities oriented work. We have been working very hard towards transforming our campus in Mysore towards a smart city and bringing in a lot of the instrumented air conditioning, power efficiency, power systems, and so forth into our campuses. We have some of the latest, actually in many cases, the pioneering equipment running in our campuses, including here in Bangalore. In Hyderabad, we recently went 100% off-grid in terms of our energy consumption. A campus of close to 20,000 people is running 100% entirely on its own energy that we get from solar and so forth. We actually, and there are days when we give back the energy into the grid. So I think that we are at the cutting edge on these things, and as the business opportunities become material and tangible, we will obviously go after that business as well. So there is a mood of optimism and hope, but it is still, I would say, early in the journey.
Thank you, ladies and gentlemen. That brings us to the end of this press conference.
1 hour time is there. Now, what is the hurry?
So we are at the top of the hour.
What is the hurry now? Still time.
45 minutes.
You should ask, before you say thank you and all. First of all, you do at 2 o'clock, and today you delayed by 1 hour releasing the results. Who will pay for that?
We have.
Is this you're giving the guidance for the March 30 exchange rate, March 31, and then for the June 1? How do we actually factor this now?
Yeah, I think
what actually, because you talk your business mostly in terms of your constant.
That's right. Yes. Yes. Yes.
When the conversion is.
That's right.
So what exactly you're trying to, what is the message you're giving at 31st? It was 66 or something. Now it's 67. Going forward, there's a new thing I'm seeing that every quarter you're benching that guidance to this thing.
So I think
volatility.
Yeah.
Apart from the business operations.
So I think constant currency is the guiding factor. So in the past we have got a lot of feedback saying that look, we also need your visibility in reported terms, because as you rightly said, constant currency is one number. However, we have to, as the currency changes during the course of the quarter and the year, it's important that we indicate to the market, look, what we meant by constant currency in March, how does it translate it today? How does it translate in June? So we need to keep that consistency. Otherwise, investors and media and general people will be very confused. So we wanted to, from purely transparency standpoint, we wanted to indicate, hey, we said 11.5 to 13.5, that translates this much in March basis, this much in June basis. So it's purely from completeness of information and transparency we want to provide.
Regarding Mrs. Vishal Sikka, I don't know, it has been asked, it's a matter of concern, in the sector. I don't know what is now happening in France, God forbid. But this Swati case in Chennai, though it happened somewhere in a station, it's some kind of a crime and murder and all. In the light of this kind of unfortunate thing, what precautions or measures you're taking to ensure the safety and the protection of women employees? Previous quarter, there was unfortunate incident in Belgium that happened, and then this quarter, I don't know, today in Nice it happened. I hope no Indian, they said so far. But this regarding Swati, has she really shared this information, and whether the family will be compensated because she was in service, she was boarding a train to go to duty?
No, this is an area that as a CEO you always dread hearing such a news, and of course in the case of Belgium, when we lost one of our Infosys, Raghav, it was an extremely troubling time. It took us a long time to ascertain that it was in fact him and that he was there. And then in the case of Swati, I found out that same evening that this had happened. We have 200,000 employees around the world, and each one of us, our entire strategy, our basis of our work is on the empowerment of each one of the employees and the value, the innovation, the creativity the potential of each one of these employees. So this is something that, as a family, it breaks our heart when we see this. We take it extremely seriously. I believe that we are as good as any company in the world when it comes to employee safety and creating a harmonious work environment where people come and feel happy and give their best. In particular, after Swati's case, we did a lot of introspection, Krish and his team. I would like to ask if Richard is here. Richard, perhaps Richard can speak a few words about what are the kinds of things that we have done. With regard to Nice, we are watching that. So far, we have no indication that there is any Infosys involved there. But this is something that obviously we are watching extremely closely.
So, yeah, right behind you, sorry. So as long as you are ahead of us, it's fine. So what we did is, this is very sad. Something which we did not know. Unfortunately, she had not shared it with anybody else, so we found this out much later. So we have worked closely with the government. We are also working with all our employees, women as well as men, to see how we can increase awareness, to help them with some amount of self-defense, to see if they can learn to go to the police earlier if they face such situation and take precautions. Given that we have had a lot of cooperation and help from the government of Tamil Nadu, and they have helped in solving the crime as early as they could. But it remains that is a sad incident. We will do just like we do in any other case to compensate the family, but we can never compensate to the extent of bringing anybody back to life. But we will do what we can, and we have a very strong insurance policy which we've had from a long time, and we use that. Given that, we really hope that we never have such incidents again. The compensation is similar. I don't want to give the individual amount because that is between us and the family, but it's not dependent on the years of service or the age profile of the person. It's because life is life, so we will not really differentiate. We need some documentation. We have to work with the agency, but it doesn't take too much time. Within a month or so, we will close this.
Thank you. Please join us for tea outside. Madhu's also asking questions.